Want my latest market insights? My latest report, Recession Risk Just Got Pulled Forward, is now available. Scan this QR code or click on the link in the description. We've talked a little bit about gold. I showed a few weeks ago a very detailed intermarket analysis. You can go back literally 2 weeks ago, maybe it's 3, where I talked about my gold miner bullish percent index. So everyone's now going, oh my God, gold is breaking out. I'm like, I knew that. So gold was not just in a consolidated wedge pattern, and it has all the macro reasons to go long until we get balanced trade and or balanced fiscal budget. And what are the chances? So until that happens, there's no reason to short gold. But in the meantime, the intermarket analysis, I said, could be very bullish for weeks, if not months. So we have started a parabolic move in some of these cases for gold, silver miners, and especially the junior miners. So we've been on top of that from a macro trade event. So not interested in oil. There are better things to trade. Not interested in bonds. I'm definitely more inflationista and definitely bullish and have been bullish the precious metals. So I'm pretty happy with that still on the macro side. And then as far as sector rotation, just timing these growth value shifts, which can be very short duration, right? July 31st. Option stack was huge. And once that gamma comes off, I'm like, prepare for some shake and bake. Same thing with August 15th. Options expiration that went into August 20th, which was in fact the VIX expiration. So this is the market structure. Hopefully you can see this. This was this July 31st stack. And then this was August 15th. And once they come off the board, it becomes very volatile. And that's exactly what we got for those who are looking at SPX, just as an example. This was exactly this. Look at that gorgeous July 31st, dumped right into that non-farm payrolls print. And then what happened on the 15th? Right here is the exact August 15th. And what did it do? It dumped right into VIX expiration, 820. Can you see that? All right. And what was that? Oh, yeah, that was NVIDIA, another top of short duration. This is why I had NVIDIA, this 169, the Qs 559. These are just reversion to the mean trades. They're not trend reversals. So just to kind of clarify that.
I agree. And that 6,400 level was big. I think as the market has shown a number of times over the last few months, it has shown that it can handle those sort of pivot points, those sort of gamma flip areas where below 6,400, in theory, there was the potential for an acceleration to the downside, and the bulls absolutely defended that once again. Those kinds of examples just make it very, very difficult for bears to kind of hold their position and really have much of a claim that this market has this potential underlying weakness that just needs to be triggered by something like a gamma flip like that. It held yet again and keeps coming back. It isn't always the Mag 7, which is amazing. We see this market kind of very resilient even as we move to other areas that are starting to act a little better. I mean, I think there's probably some argument for manufacturing numbers to improve at some point, PMIs, things like that. And I think you sort of see it in some of these numbers, some of these names that have been doing okay. I think semiconductors will obviously continue to do well, but capital good companies are doing very, very well as well. So I think, and then of course, now you've got sort of the banks taking over. It isn't just the capital market plays like the Goldman Sachs and JPMs. It's some of these other ones as well, starting to react more positively. And really, if you look at them versus the S&P, there's a lot of room to the upside there. So if you sort of look at that relative to the S&P, the banks have been coiling for the better part of since say November, December. And I think they're almost ready to go again. So there's all these little things that are picking up on this potential for rate cuts to come. I think everybody's figuring, okay, we're going to get 25. I'll agree with you, Samantha. At some point, you can't have your cake and eat it too, in a sense. You can't have all this amazing growth and the potential for some areas of the economy to get rejuvenated and for all this productivity to work its way into profit margins and an increase in activity and economic activity without inflation kind of at least sort of hanging in there. So
let's talk a little bit about, because you covered lots of different things, but as it relates to trading themes. So I've got a very strong theme I've been on since last year that we would see recession risk pulled forward at the end of this year. This was before Trump was elected. This was before the Trump tariff terrors and the delay of such. It was also before, and I really want to emphasize this point, is the greedflation, which is not really talked about, but in fact, in the last iteration of looking at what contributed very much to the PPI, which is producer price index, which is rising, and this debate about tariffs are inflationary or not. What's actually been very inflationary are margins. Corporate margins have been bid from McDonald's pricing themselves way above the competition to maintain margin, which is, by the way, helping them maintain a pricing of their stock, but not necessarily for their audience to consume as much. So the CEO was on yesterday talking about how they're seeing a shift in traffic. It's down by, I forget how much he said, 1/3 or something. Well, at the same time, they're charging more than their competitors by a significant amount. They're really taking at the front running the tariff hit on higher prices. So they do not have margin contraction. So that's greedflation. That's just like front running.
$75, Samantha, for me to take the family to McDonald's on a road trip. $75, and I don't think my wife even really had anything. So they are definitely making this decision that can't be popular with the masses, which is, okay, we're going to grab some of that trade down, maybe from mid-tier restaurants. We're going to grab that trade down and we're going to throw everyone else under the bus who used to enjoy our $4.99 meals. It's a real shift. You're right. That's a very...
So this will start to hit disposable income. This will hit consumer spending. But for right now, the market is rewarding a massive, beautiful beat. So Q1, we weren't worried about. Q2 came in roaring. Q3 and Q4, I contend, are going to be slowdown periods, not just because they've pulled forward so much of this demand, whether it be goods or services, but also in corporate margins. So I think we're going to see a massive earnings growth slowdown in Q3 and Q4. That's number one. We've already gone through the shrinkflation. We're not near deflation, but we definitely will see consumer spending hit in certain categories, which is going to hit corporate margins, etc. So I still have this baseline bet that we're going to see a very different view toward the end of the year as it relates to the regular economy. But I also want to say I've got this thesis also where we have to focus on what's coming up that is very bullish. I can go through growth value rotation scare charts, steepener charts, job growth revision charts. They're all very scary as it relates to a pullback in the equity market. And then, of course, what happens with employment. But we've got corporate issuance coming back. And so that's why I'm a little bit more negative until FOMC. But the corporate issuance should be coming after FOMC. So we should get these numbers. And what does this mean? Because we're already record levels, I think 1.8 trillion year to date in corporate bond issuance and about 1 trillion in corporate stock buybacks. They're tied. So we have this situation where if we can get a very, very strong September 2025 corporate issuance like we did last year, we can absolutely see the markets run up into end of year. So we're not there yet, but that is why I am still of the opinion that we're going to have a lot of chop, which means careful. It's not going to be, we're not on breakout mode. In fact, I mentioned to clients before we hit that 65.05, that JP Morgan collar we talked about. I said, I think it's done for now, at least until FOMC. We're going to have chop until FOMC. And then let's see what the corporate bond issuance looks like. It's expected to be very, very good. That will carry the momentum forward into the end of the year.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full options macro to micro power hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.